So there's big changes coming to your 401k thanks to Donald Trump's executive orders impacting 401ks. And these are pretty dramatic changes. So I'm sitting here with CFP professional Cheri Turner, and I'm Cary Smith. We're both with Client First Capital. And Cheri, I know that you've been studying these changes and the impact of these changes, maybe some of the risk and some of the opportunity that are coming along with this. So if you don't mind, just walk us through what this executive order, what it changes for our 401ks.
Yeah. So on August 2nd, the president just signed an executive order that could mark a major shift in retirement savings policy in the United States. So while executive orders don't change the law outright, they do signal a clear shift in direction. And in this case, it's about expanding the kinds of investments that can be offered in workplace retirement plans like 401ks. So specifically, the order directs the Department of Labor and the Treasury to review the current restrictions and then to propose changes that could actually make it easier for retirement savers to access what are known as alternative investments. Now, alternative investments are not new. Wealthy individuals, hedge funds, and large institutions have actually been using many of them for decades. But the average worker saving in a 401k hasn't had these options. So the executive order essentially aims to change that by encouraging agencies to explore how assets like private equity, real estate, and even cryptocurrency could be incorporated into qualified retirement plans. That said, this is not a mandate. The order simply sets the wheels in motion for regulators to begin evaluating the feasibility, the risks, and the safeguards required to make this kind of expansion possible. So while nothing's actually changed yet for retirement savers, this move does signal the beginning of what could become a really significant transformation in how 401k plans are structured.
Yeah, so Cheri, that's a really good point because when I first heard about this, the impression I got just from reading headlines were, "Oh, this changed," right? Like,
Mhm.
right. But
Mhm.
as just like you, as I began to read a little deeper, is nothing has changed yet. But
Right.
to your point, um, it's being studied,
Mhm.
and will likely, I would imagine, out of this study, likely be recommended, right? And so this may trigger some important changes in the, I don't know if it's near future or medium term future, but it's probably not long term. It
Right.
probably is, I would imagine, something maybe a little midterm.
I agree. I
Okay.
agree.
All right.
So what does this mean for people's 401ks? Today, most 401k plans are basically designed with simplicity and broad diversification in mind. The investments usually include mutual funds, index funds, target date funds, and then bond or often money market funds. These choices are relatively easy to understand, reasonably low in cost, and they basically offer a basic path for long-term growth. But if regulators do follow through with the executive order's directives, that investment menu could expand significantly. In the future, your 401k might include several new options, including things like private equity funds, which invest in privately owned businesses ranging from early stage startups to mature companies that just aren't listed on the stock exchanges. Real estate vehicles that go beyond the traditional REITs that are offered now, and they offer exposure to professionally managed portfolios of actual physical properties. And then also crypto linked assets, potentially through new ETFs or approved vehicles that could provide exposure to digital currencies.
So Cherie, so let's just say if I'm watching this video and I have a 401k, I've
Mhm.
maybe been working 10, 20 years, and I'm starting to get to the point where, I have a good amount of money in there. So I've got a lot of investment choices today, right?
Mhm.
You just mentioned, stocks, bonds, and mixtures of the two, and all different types of risk tolerances within those.
Yeah.
So is this really a big, is this a big deal?
You know, here's why this matters. Alternative investments are appealing because they can offer benefits that traditional investments often don't. Things like higher return potential, especially in areas like private equity, where early stage or rapidly growing companies can often deliver really substantial gains over time. They often have a much lower correlation to the stock market, meaning they don't always move in the same direction as stocks and bonds, something that can really help to smooth out the volatility during uncertain times.
Okay.
And it provides access to new sources of growth, things like real estate and digital assets that have historically been out of reach for the average retirement investor.
Okay.
Yeah.
And so,
Sorry. For individual investors, especially those with a longer time horizon, it opens a door to building portfolios that are essentially more diversified and potentially even more resilient.
okay. So, is now a good time for us to maybe talk about risk and opportunity?
Yes, yes.
Okay. So if I'll just throw out my initial thoughts. I know you've studied this. You probably can take those thoughts and refine them a little bit better. But my initial thought is, if you're an investor, if you are a sophisticated investor and spend a lot of time looking and studying and planning your moves, and you have a lot of knowledge and maybe even the right tools, this might be very interesting. And I would say that person probably has the ability to get in there and judge the risk, and then also be wise about how much of their portfolio they put in one of these investments. But if you're not a sophisticated investor, it seems like just the ability to gauge risk or opportunity it could be a little more difficult. And to me, it feels like there's more opportunity here, but you need to be careful and understand what you're doing. But I'll let you kind of put it in your words.
Yeah, no, like you said, this isn't all upside, right? This comes with some real risks. Things like illiquidity. Many of these assets can't be easily sold when and if you need cash.
Yeah.
Higher fees. Most of these types of investments, especially with private equity and real estate funds, do come with higher fees. Increased volatility, definitely, especially with things like cryptocurrency, which is very unpredictable. And then also limited transparency. Even for people who are experienced, many alternative investments don't offer the same level of reporting or public information as traditional mutual funds or stocks. And as you pointed out, increased complexity. They're harder to understand and much more difficult to manage without guidance. So while the risks don't necessarily mean that you should avoid them altogether, you definitely need to approach them with much greater care, deeper understanding, and a really clear strategy that's aligned with your financial goals.
Okay. I knew you could put that in terms that sound a little bit better than the way I did. So, Cheri, if this goes through and it's approved, are all the guardrails removed, or are there some caveats, or what does the landscape look like if someone go forward?
Right. So for right now, this is just the first step, right? In the months ahead, the Department of Labor and the Treasury will likely propose some new guidelines. After that, your employer and the company that manages your 401k will together decide whether or not to even offer these new options. Okay. So even if the rules change, it's possible that your specific plan may not. So what can you be doing right now? Stay informed. The rules are evolving and more updates will be coming. Know your risk tolerance. These kinds of investments, as we said, are definitely not a good fit for everyone. And then avoid chasing trends. Just because your 401k could offer crypto or private equity doesn't mean you necessarily should invest in them.
Yeah. So there's definitely stuff probably in your 401k that you don't invest in today because it just doesn't make sense for you, right, depending on where you are. And so I would say that doesn't change with this, that right, you may look at it and it just may not be the right thing. Mm-hmm. And so, okay. I've got a little call to action. I'd love to hear from, people who are watching this video, but before I go there, any final thoughts as we wrap this up?
I would just say the executive order is really about increasing choice and opportunity, but remember that with more options does come more responsibility. Yeah.
Okay. Well said. So anyway, Cheri and I would both love to hear from you if you're watching this video. Just make some comments. Would you invest in crypto or private equity in your 401k, right, that you're saving for your retirement. Is that something you would do, you wouldn't do? And just maybe share why or why not. And just looking forward to some discussion. We'll be monitoring the channel today and throughout the next several days. And so we'd love to hear your comments.
Love to know.
All right. Thanks, Cheri.
Thank you, Cary.